Equity futures just about flat near record highs with 30 minutes to go until the official start of trading. I'm Katie Greifeld.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, chipmakers Nvidia and AMD make an unusual deal with the U.S. government that's raising alarm bells. And gold futures slide. Traders waiting for the White House to clarify last week's surprise tariff on bullion bars, and crypto stocks rally. Bitcoin nears a fresh all-time high as big investors pile into digital assets, Danny.
There is one story and one set of stocks to watch this morning, Katie, and it is Nvidia and AMD. The two of them have reportedly agreed to pay 15% from their China AI chip sales to the U.S. government. The company sold about $23 billion in chip sales to China in 2024. So, Katie, Nvidia down 0.5%, AMD down just more than 1.5%.
So many different angles on that one. Yeah. We're going to tackle them all, but let's take a look at another chip maker, Micron, raising its revenue forecast due to favorable pricing for its memory modules. You take a look at Micron shares right now in the pre-market, higher by more than 5%, Danny.
Yeah, it's a lot of moving parts and a lot of different fates for different tech companies, but let's begin with Nvidia and AMD. Joining us now for more is Bloomberg Tech co-host Ed Ludlow. Ed, it's hard to put into words how strange and unprecedented this is. What do we understand of the deal struck by the Trump administration and these two companies?
Yeah, it is a quid pro quo. It is transactional. That's the way that sources describe it to us, right? That is the price of access to the Chinese market in order that Nvidia and AMD can sell AI accelerators or high-performance GPUs to Chinese AI model makers. 15% is probably more interesting in Nvidia's case than it is in AMD's, right? You know, when I spoke to AMD CEO Lisa Su last week, they hadn't yet managed to claw back any of the inventory that they'd written down because they were unable to export to that market. AMD's not commented on this latest reporting. Nvidia has, and in their statement, they don't talk about the 15%. They do address the idea that to date, since the bans came into effect or export restrictions came into effect, they have not yet shipped any H20 chips. But there's like this really wide range of estimates on the street, right? Where AMD has a higher proportion of historic revenues from China. Nvidia is just a much bigger beast. It's 95% of that market. And if they're able to return to business there, you're looking at what, $7 billion in a fiscal quarter? The United States is going to get $1 billion of that. And that's the unprecedented part.
Well, let's talk a little bit more about what exactly the chip makers, Nvidia, AMD, get out of this. It makes sense what the U.S. government gets out of it. 15% of China chip sales doesn't sound that bad. But we were just looking at that graphic where 13% of Nvidia's revenue, I believe, comes from mainland China. So I guess you do the math. It's more painful to give up that than it is to give up 15% of their revenue from those sales.
Yeah, historically, but the status quo is that Nvidia in this current period is not shipping H20s to China. The part of the calculus that Jensen Huang, in both the public domain and behind closed doors, has been trying to impress upon the president is that if Nvidia and AMD are not able to sell their technology into China, then China has a domestic champion that can fill the vacuum. That domestic champion is Huawei. And the argument that Nvidia in particular has made is that Huawei is catching up. It has a level or generation of accelerator that is more performant, better than those that are subject to export restrictions, the H20, the MI308 anyway. And so that's the risk that America's running. But I leave it to AMH and those in DC to talk to you guys about fiscal policy. The president did talk for a long time about the idea that specific tariffs on specific industries would be revenue generating for the United States. And if you read the Bloomberg terminal on any given day, the flow of capital is most concentrated right now in high performance GPUs that go into data centers. So a good bit of business for the president of the United States. But the cost of doing business for Nvidia and AMD, they want to be in China, which for a very long time was a critical end market for data center.
All right, Ed Ludlow, great reporting as always. That is Bloomberg Tech co-host Ed Ludlow joining us from London, which is a little bit fun. We'll see what he's up to there. But let's talk a little bit more about Micron, raising its forecast thanks to favorable pricing for its memory chips. For more, we'll bring in now Bloomberg Intelligence semiconductor analyst Jake Silverman. So you can see the reaction pre-market in shares. Some good news here. This is a different setting than we were in June when we got that disappointing outlook from this company.
Yeah, and really it comes down to supply and demand balance. So I think high bandwidth memory is actually having a pretty important impact, but not necessarily from near-term upside related to AI, but actually just its constraining impact on overall memory because of the fact that high bandwidth memory is accounting for more revenue and requires more capacity than standard memory. If demand for standard memory grows, that allows for higher pricing.
How does that offset some of the pricing concerns and some of the tariff-related concerns?
Yeah, as of right now, it doesn't seem like Micron is going to be directly impacted by tariffs. They're trying to expand their capacity and their U.S. footprint in Idaho and eventually New York as well. So there is a potential impact for higher pricing in the U.S. on some products, but it doesn't really seem like Micron or their peers, SK Hynix or Samsung, are really going to see that impact. And so therefore, right now, we're not overly worried about higher memory pricing impacting demand for products. That could be more so downstream. So if there are higher pricing for smartphones or PCs, which as of right now it's a little bit more in limbo, obviously that could have a lower that demand could be lower.
All right,
overall.
Jake, thank you very much for that. Micron shares at the moment up 5.2%. Jake Silverman from Bloomberg Intelligence. Now on to politics, where the tariff truce between the U.S. and China expires tomorrow. Treasury Secretary Scott Bessent is hopeful that a number of trade deals will be completed by October. Joining us now with the latest is Anne-Marie Hordern, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. Anne-Marie, great to see you. How close does it seem to getting either an agreement or some sort of extension between the U.S. and China?
It's likely going to be an extension. The Treasury Secretary has said to me likely they'll be rolling this forward, probably 90-day increments until they get a final comprehensive deal. Then when they left the latest trade talks, they were talking about the fact that they pretty much have an extension in place, but it was the president to decide. And so far, we have not seen Trump come out and decisively say that they were going to do this 90-day extension. What we have seen him come out, though, overnight is talk about soybeans and how China needs to up their purchase of soybeans, which was critical during the first Trump administration when you look at the phase one trade deal and these purchasing agreements. And this is politically important for the Republican Party, especially the president, given the fact that we're going very much so, we're going close to harvest season. These are Republican states that this could potentially affect, and we are just about to go into this truce deadline tomorrow. Most people think it's going to be extended, but yet again, we haven't heard that from the Oval Office.
I want to focus in on soybeans because that post overnight urging China to quadruple their purchases of soybeans, there's not a lot of indications that the nation plans to do that.
No, there isn't at this moment. They haven't been living up to the phase one purchasing agreement since it was signed during Trump's first administration. We should note that agreement in itself took about 18 months. And now when you look at the dialogue between Washington and Beijing, this time around, the list of issues that they are getting through. Export controls. You just talked about this when it comes to Nvidia and AMD with Ed Ludlow. Rare earths. What's happening with the TikTok deal that the CCP, China would have to potentially sign off on? Potentially the U.S. is also asking and imploring the Chinese to put their thumb on the scale when it comes to Russia's invasion of Ukraine and on Moscow. And the president's going to go into this meeting on Friday with Putin. Is China potentially trying to put some pressure on Putin to wind down this war? There's a host of issues that the U.S. administration is dealing with right now when it comes to China. But it was kind of shocking the president decided overnight to talk about soybeans, I think potentially because we're going into harvest season, because that was so critical of the first administration and hasn't been the center point second time around.
Well, to the point of Trump and Putin's meeting on Friday, it's something that already the Europeans are starting to sound the alarm bells with Trump talking about a swapping of territories. How much can be agreed upon if Europeans and Zelensky of Ukraine have already started to push back on the initial sounds they've gotten from what the two might discuss?
Well, this is very challenging for Zelensky to accept because this would be giving up Donbas region, the whole Eastern Front, which means he would have to pull Ukrainian troops out of Luhansk and Donetsk, parts of Ukrainian territory that they have control over. So this is, as someone described to me over the weekend, the third rail in Ukrainian politics. And this is just talking about territory, not even the major fundamental issues. What does Ukraine's future NATO look like? Is that not going to happen? What is going to be on the table to make sure that Putin and Russia does not invade Ukraine again, that they can walk away with long-term security guarantees. And I think that's what a lot of European leaders want to try to implore on the president if they are able to speak with him before going into this meeting on Friday. Someone described Friday to me as potentially the best outcome would be an agreement in place to start a process to get a long-term peace agreement.
All right, Anne-Marie, it's definitely going to be a busy week. Appreciate you setting it up on the political front. That is Anne-Marie Hordern. Meanwhile, we're about 20 minutes away from those opening bells. A quick check on futures right now. Pretty much flat, but we're very, very close to all-time highs on the S&P 500. And you remember last week, we actually posted a gain of 2.4% on the S&P 500. It didn't quite feel that way, Danny.
It didn't feel that way, but it is ridiculous that amid all that, we're basically a rounding error away from an all-time high. I think it's less than 0.01%.
Just a sneeze.
We don't need to do a lot to get there today. We'll see if that happens. But coming up on the show, Barrick Mining slips. It posts a $1 billion charge as the entire industry gets rattled by tariff rhetoric. We're going to look at all things metals coming up as Barrick falls more than 4%. This is Bloomberg Open Interest. Let's get you some high interest stories. A look at what's making headlines around the world. First up, Intel CEO Lip-Bu Tan set to visit the White House later on today. The Wall Street Journal reporting that Tan hopes to show his commitment to the U.S. The visit comes after President Trump called for his immediately removal over his ties to his Chinese businesses. And lithium stocks, they are spiking this morning. Battery giant CATL halted operations at a major mine in China. It comes after weeks of speculation that authorities wouldn't extend the mine's license. The move sparked concerns that Beijing might suspend other projects. And shares of Barrick Mining are falling in the pre-market trade after the company reported disappointing earnings. Both gold production and sales volumes estimates for the second quarter missed. The company also posted a net charge of over $1 billion related to the seizure of its gold mine in Mali.
And for more on Barrick and all things metals, we're joined now by Bloomberg's economic statecraft reporter, Joe Doe. And Joe, we heard from the CEO of Barrick earlier today saying that the gold industry is waiting for clarity on U.S. tariffs, and I think we all are after sort of the back and forth we got on Friday.
Yeah, I mean, the White House, we had a report late Friday that from a White House official saying that they were going to give clarity to the market regarding quote-unquote misinformation. I think what they were referring to was the CBP's ruling, which is a government agency's ruling that, yes, 100-ounce and 1 kilo gold bars would be tariffed. The expectation is that the clarification will say, no, actually, there's not a tariff on those. But until you get that announcement, I mean, the trade is where it has to be.
Well, Barrick maybe not as directly exposed because they're a miner, not a refiner. But in general, for the entirety of this industry, how vulnerable is it to some of these disruptions? And how quickly can things get back up to speed if we do get that clarification that, no, there's not tariff?
Yeah, I mean, this is piping, right? Like, if you just destroy the pipes, then the water never runs. If you cannot clarify that gold bars, I had mentioned before, gold bars are constantly going between New York and London, right? They're flying back and forth. The underlying exists for the paper that's traded on the screen. And so when you have to move gold from COMEX warehouses in New York to bullion banks in London, there actually has to be a change in the way that bar is put into those bullion vaults. So you have to remelt it in some place, which happens to be Switzerland, that can change it from a 100-ounce bar to a 400 gold ounce bar. If you're suddenly putting tariffs on that, you have just a massive dislocation in the market. That's what you saw late Thursday and into Friday morning.
Yeah, it was just dizzying trying to follow all the different tentacles that could come out of this. Let's talk specifically more about Barrick, though, because the reason that you have shares falling today is chiefly related to that $1 billion charge that they took on their mine in Mali. And this is a situation that has been simmering for some time.
Yeah, I mean, you have a military junta that has effectively taken over the mine there. Suddenly, you just don't have any control of a mine that's a significant part of your revenue. The $1 billion net charge, I mean, they did point out, listen, we did get a gain from selling 50% of a mine in Alaska at $750 million. But, I mean, you got a situation here where already 4 Barrick employees have been apprehended. I mean, this is a bit messy. And it is a reminder that mining globally is not just like doing business in the United States. It's not just running a steel mill, in Pittsburgh. You always have to be worrying not only about bottom line, but government relations, actual diplomacy from companies with statewide country officials.
Unfortunately, Joe, that seems to be a growing thread amid all types of companies these days.
Yeah.
We'll save that for later, but another one of these instances is just looking at what's happening with lithium today, with stocks related to lithium, lithium itself spiking, with CATL closing down a mine. How much of this is about a shift in Chinese policy?
Yeah, I think the question is that will there be a shift? Are we seeing this move by the Chinese government to address, quote unquote, overcapacity? The overcapacity issues are across the spectrum in China. It's not just lithium, it's steel, it's many other industries. The idea being that you run manufacturing facilities and mines all out because essentially underlying all of that are jobs, right? And you want to keep people in those jobs. The question is, are we starting to see the Chinese government say, okay, the overcapacity is a problem long term, we need to rein that in? That's why we're seeing the lithium market move in a way that we haven't seen in a long time. And the questions of, okay, well, these gluts that have been around because of the Chinese overcapacity, will that suddenly disappear? This is at least the tip of the iceberg, I would say.
The tip of the iceberg. Certainly a lot of big questions hanging over the lithium markets as well as the gold markets. Joe Doe following all of it for us. That is Bloomberg's Joe Doe. And in the next hour, I'm pleased to say we'll be joined by Barrick Mining CEO Mark Bristow just about at 10:30 a.m. You don't want to miss that conversation. But let's take a quick look at equity futures right now. 12 minutes or so to go until the opening bell. Again, small moves overall, but when you're at record highs, it's hard to complain about green on the screen. You have a little bit more direction when you go down the list. The NASDAQ 100, I'm going to call that unchanged, actually. But the Russell 2000, those small caps, higher by about 0.2% right now, Danny.
Yeah, maybe happy that bond yields are coming down, or that apparently everyone seems to be a bull these days.
There you go.
Yeah, well, we're going to talk about that and more. Citi among those bulls, boosting its S&P 500 call after strong earnings. HSBC's Jose Rasco also optimistic. He's going to be joining us next on Bloomberg Open Interest.
A record share of fund managers see U.S. stocks as too expensive. 91% of respondents from Bank of America's monthly survey say that stocks are overvalued, but they also see the lowest probability of a hard landing since January. Certainly haven't heard that term for a while. This comes as Citi strategists raise their year-end S&P 500 target to 6,600. They argue that tax cuts should offset the negative earnings impact from tariffs. Let's make sense of it all with Jose Rasco. He is CIO for the Americas at HSBC Private Banking and Wealth Management. Jose, great to see you in person.
It's great to see you as well.
So let's talk about that setup. Okay, perhaps U.S. stocks are overvalued, but how are you weighing that factor against the corporate fundamentals, which seem pretty strong still?
It's not just the corporate fundamentals. You also have the onset of a Fed easing. And historically, going back to 1990, there have been 7 instances where they have begun to ease after a pause of about 6 to 9 months. And the S&P rallies in the following 12 months about 23% after the onset of easing again. That's one factor. The other thing is the tax rate, which you touched on briefly. And third is the secular themes we see. Inflow of capital. The U.S. is the #1 destination for foreign direct investment since 2018. It's almost double the second country in the world, which is the Netherlands. So there's something going on.
So that Sell America trade, that just wasn't truly a thing?
You know, at the end of American exceptionalism, I don't see it. I'm sorry.
There is another twist in this, Jose, and it is another consideration if you are a chief executive in corporate America, and that is the government intervening in your business model if you're AMD or Nvidia, or outright telling you should go if you're the Intel CEO. Does that not make you pause in your bullishness, or at least reassess things like profitability if the American government is asking for a share of your revenue?
So, yeah, a share of revenue, but a share of expanded revenue and large expansion in revenue, hopefully, right? So hopefully they've done that arithmetic. I leave that to the CFO of those companies. But if you look at the broader question, is government interference or shifting in government policy? Definitely. Last year we had more elections than we've ever had. This year we're dealing with the aftermath of that. And in the U.S. we're feeling it for sure. But I think if you look at the quality of earnings And more importantly, I remember, I'm old enough to remember the 90s, not you two, but old enough to remember the 90s.
We were alive.
We were
Well,
absolutely
you were alive,
alive.
but you were in grade school. I was actually doing this on this set, actually. And in the 90s, companies, you know, PEs soared, but they had no earnings. We talked about 5-year forward earnings. It was ridiculous. Today, these quality companies, trillion-dollar companies, they're making money, and a lot of it. So.
Yeah. No,
And we haven't still seen the deflation from the tech revolution, which is coming after the productivity.
So you add it all together, it sounds like you're fairly bullish here, Jose. What would be the fly in that ointment?
Well, I mean, clearly policy error, government or the Fed. Look at the auctions last week, right? Troubled auctions at the long end of the curve. We saw interest rates back up. That could be problematic. Max Kettner, who I know you've both worked with in the past. I love Max, dear friend, brilliant guy. And he's talked about the danger zone of rates shooting up too high. I don't think we're going to see that, but we are seeing term premia rise, and we're seeing that the long end of the curve is stickier, right?
Jose, literally a minute here, but you talked about deflation in tech, but what about things like utilities and energy getting more expensive as these AI players hoover up all of the energy needs?
Yeah, no, they are using that energy, but that's why we're going to see a lot of increase in production. More importantly, increase in energy efficiency. That is going to be a term you're going to hear a lot of in the next couple of years.
All right, Jose, we are just getting started. You're sticking with us through the opening bell. That is Jose Rasco. Let's take a quick check at the setup with just about 4 minutes ago until those bells ring. The S&P 500 hanging on to its pre-market gains. I can't say the same about the NASDAQ 100. Now unch on your screen. Even that rally we were talking about in small caps fading a little bit on this Monday morning, of course, close to record highs. And we saw a big rally last week, maybe losing some momentum here. We'll bring you through all of the opening action up next. This is Open Interest. All right, we are moments away from the official start of trading on this Monday morning. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld. You take a look at where we stand on futures. Not too hot, not too cold. The S&P 500 pretty much flat in the pre-market. The NASDAQ 100, it's the same story. The Russell 2000, a little bit more green, but still contained at these record highs. We know we have a big week ahead of us. CPI coming out tomorrow. We're still in the thick of earnings season, and there are a lot of questions about geopolitics at this stage of the game. But you take a look at the opening bells over at the New York Stock Exchange, down at the NASDAQ. The bells are ringing as we greet a new week after a big rally on the S&P 500 last week, and chips particularly in focus right now, Danny.
Yeah, maybe this is what will prevent us from getting to all-time highs if we attempt to do that. Again, 0.01% away from it as the close on Friday. But here's what Nvidia and AMD are doing. Both of them agreed to pay 15% of their revenue from Chinese AI chip sales to the U.S. government. The companies, just to put in context, they sold about $23 billion in chips to China in 2024. We're just speaking with HSBC, Katie, who says, yeah, they have high revenue, so they can handle this.
Yeah, absolutely. And you can see traders trying to make sense of the news. Nvidia shares just about flat. I have to imagine that'll change. But let's talk a little bit about Micron, also in the chip space. Micron raising its revenue forecast this morning due to favorable pricing for its memory modules. That is a different setup than what we saw in June when we got a disappointing outlook from the company. But Micron shares at the opening bell up about 7%, Danny. That is certainly helping.
Yeah, it's helping a lot, 6.6%. And it's a lot to digest in this market, and we're trying to make sense of it. We're back with Jose Rasco, CIO for the Americas at HSBC, Private Banking and Wealth Management. So, Jose, I mean, Micron is an example of one of these companies that post-earnings have moved a lot. On a headline basis, as Katie was pointing out, we're barely changed today. You're seeing huge swings. You're seeing companies getting punished massively for missing. What do you make of just the volatility of this earnings season?
So one of the things we haven't talked about, and you asked before, what are some of the negatives? What are the potential hazards? In the short term, remember, September, October, not great months for stocks. More importantly, growth value, the Magnificent Seven versus what I call the Forgotten 493, right? I should have patented that, damn it. But long
Not too
story
late, Jose.
Not too late. We'll do it together. But long story short, growth value, that disparity, you're going to see mean reversion. And even though I would argue valuations are up, but they are not excessive. We've done the work on valuation cycles, we are sort of middle of the range in terms of the expansion in multiples, forward multiples, and where they sit relative to history. They're middle of the pack. It is not excessive relative to history. People may not be comfortable, but remember, these companies are making money and the long-term secular themes are all in place. That's why we like industrials, we like energy, and we haven't even seen financials kick in with M&A, with stock buybacks. This is all, when you see a market that's up a lot and the Fed starts cutting rates, those stocks are weaponized to go out there and create activity in the market, right?
I do want to talk about the Fed, but I want to talk a little bit more about the forgotten 493. We'll make that happen. There was a note
The
from
three of us.
the three of us on this show.
We need royalties, basically, Jose, when we start using it. Yeah.
There was this stat from Goldman last week, though, talking about earnings growth. The Magnificent Seven apparently grew earnings by 26% year over year in the second quarter. You take a look at the 493. That number was just 4%. That seems like something to forget.
So I'm a big believer in not looking where you've been. Let's look to where we're going. Where we're going, 23% for the Mag 7 goes to 15, 4 quarters out. The Forgotten 493 from 4% goes to 15, 14 and a half. I lied. I rounded. But
fine.
Long story short, that's going to almost quadruple in terms of the Forgotten 493. Easy comps, I know, but it's also productivity. In fact, one of the things we do, we look at a portfolio where we don't look at tech. We look at the beneficiaries of tech. Who's going to use tech better, company X or company Y? That's the company we want to invest in. Productivity, profitability.
But it's a changing business model. If a company becomes more productive, they need less employees, they become more asset light, whereas the big tech players, we used to value them because they were asset light, and that's changing. They're investing in huge data centers. Does that mean the way that you value some of these companies needs to change?
Absolutely, and that's why interest rates matter, and that's a great segue to the Fed, maybe.
Yeah.
But the other thing I would say about AI, which nobody's talking about, AI, yes, will reduce employment for basic jobs, but it's also going to make the average employee smarter because the tech is going to reach down and pull you up. It's going to enable you to be smarter in what you do day to day. It's going to, technologically, it's going to take away some of those responsibilities, making you more valuable to the company. So
it's an optimistic take versus it's just going to take all of our jobs. But I'm going to take you up on that segue to the Fed.
Yeah.
It seems like we're coalescing around September is finally when we're going to see the next rate cut from the Fed. But you look at the trajectory of the rest of this year, 2 cuts, 3 cuts, where do you land?
So we think for the next two cuts this year, September, December, and then 1 in March. That's what our economics team has said. And the problem you have is what concerns me with the Fed, quite frankly, is when Jay Powell came out and said, we're looking at the unemployment rate, that is not a leading indicator. You want to look at claims and you want to look at what the companies are telling you through other indices, not the unemployment rate. And if they're going to wait for inflation to see the whites of the eyes of inflation, we may have policy error. I'm concerned about that one because tariffs have been delayed.
How important that you get more than 1 cut for this rally to continue?
It's helpful, but it's not significant. Remember, in the 90s, we didn't have 1 rally. We had 4 market rallies in the 90s. And the average Fed funds rate, 5.3%. Interest rates help, but they matter on the margin. If there is demand and if the consumer is out there, remember, real disposable incomes are still positive, right? So we're not raging bulls, we're not Robert De Niro, but we are cautiously optimistic on where we go. But remember, this mean reversion still has to take place.
Well, the concept of policy error, you listed it as a concern of yours. Is that investable? Are you protecting and hedging your portfolio for that possibility? What does that look like?
So from an asset allocation perspective, getting away from equities, right? Yeah, we're telling clients to take protection in the market, number one. We're telling them to diversify into the alt space, whether it's hedge funds or private markets. And I know private markets have had their share of issues. Credit in particular has done well. We like it. And I think if you look at the hedge fund space, it's done pretty well. So we continue to like those uncorrelated asset classes.
All right, Jose, really enjoyed this conversation. Can't thank you enough for kicking off the week with us. That is Jose Rasco of HSBC. Meanwhile, we're just about 7 minutes into the session. Let's get a check on this market right now. For unchanged on the S&P 500, breadth is actually fairly good right now. You have nearly 400 names in the S&P 500 in the green, and it's all the names that you would want to see. Tesla up top there, that is your biggest contributor to the upside. You also have Eli Lilly, Micron helping out as well. As discussed, United Health also punching higher as well. Haven't seen that in a bit. Then you take a look at the downside, though, and this is where it starts to hurt. Apple, your biggest loser on a points basis in the S&P 500, followed by Nvidia, Amazon, Alphabet, Microsoft. A real tug of war going on with big tech between Tesla and Apple, and then what else is going on. Let's take a look at the sectors in any case. And as we were seeing on the individual level, the breadth is pretty good. There's a lot of green bars on this screen right now. Healthcare, your biggest gainer, followed by energy and consumer discretionary. So it's not just big tech running away with it. In fact, big tech is your biggest drag on the downside, down about 0.5%. Danny, we'll see, of course, what the S&P 500 does with this over to 4 p.m.
Yeah, it's all about AMD and Nvidia dragging that down. It's kind of surprising you're actually not seeing more losses given the fact that they're going to have to give 15% of the revenue to the U.S. government. Coming up, we're going to have more on that story. Again, Nvidia and AMD agreeing to pay the U.S. government a portion of their chip sales. Shares are down just under 1%. We're going to take a closer look next on Bloomberg Open Interest.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Morgan Stanley upgrading Freeport-McMoRan to overweight, saying that markets are failing to appreciate the potential benefits from President Trump's copper tariffs, maybe not appreciating it too much this morning. Shares only up about 0.1%. Next up, HSBC downgrading trade desk to hold. The analysts turning more cautious after the company's lackluster results. Shares actually higher right now, but really took a beating last week. And finally, we have Melius downgrading Adobe to sell, warning that artificial intelligence could become a growing competitor for the company. That has been haunting Adobe for some time now. Shares down about 0.6% right now.
You need that AI in Photoshop, or else you just can't get those fancy pics, of us with like rainbows and dolphins jumping over us. It's very necessary. Let's stay on tech, but not that. A different flavor. A more important story this morning. Nvidia and AMD agreeing to pay the U.S. government 15% of revenue from some chip sales to China. The news sending both of them into the red, but off of the lows, down less than 0.5% for both those companies. Joining us now is Bloomberg Tech co-host Caroline Hyde. The shares aren't off a lot, Caroline, but this is unprecedented. This is maybe even strange for these companies to reach an agreement like this.
Yeah, call it what you will, whether it's pay to play, whether it's quid pro quo. Many people looking in astonishment at what has just been agreed. Led by the charge, it feels that Jensen Huang went to the White House on Wednesday and came back with this sort of a negotiation, AMD playing along here too. But for Mizuho and others in the market saying 85% of something is better than 0% of nothing. And so this is only going to be a revenue contributor for the short term, at least, when they start to be able to bet those H20s back into people's hands, those MI308s back over from AMD into China. I think people are seeing the positives from a revenue perspective and indeed from an American revenue perspective. Look, if you're going to be making $1 billion a quarter on Nvidia's 15% tax rate alone, and then you add AMD on top, this is really, from I can imagine, the US government perspective, a bit of a win-win. They're able to, from their perspective, be able to track what semiconductors are still being sold to China. They're able to talk tough, but they're also able to rake in a revenue share here. So it is unprecedented, and the spillover effects are going to be far and wide. But thus far, people actually coming off of their share lows, I think, when it comes to AMD and for Nvidia in particular.
Absolutely. And we were just having this conversation with Jose Rasco that probably the CFO over at Nvidia did that arithmetic and came to the same conclusion. 85% is better than, what it is right now. And put that into context for us, just how important the Chinese market is for the likes of Nvidia, AMD, and what is the current state of sales when it comes to the nation?
Well, when you think about $7 billion in a quarter alone for Nvidia, that's the power of the amount that they were shipping over to China. And I think for AMD, you saw the beating that the stock took last week on its earnings because they couldn't give us the intricacies of when they were going to be able to get MI308s back into the market, when we were going to be able to start revenue generation there. Investors care a lot about that particular end market. Now, I think the longer term perspective is well, what does this ultimately mean for breeding competition in China? And what does it also mean for China's own pushback on this? Look, you saw the reports coming out from those that follow state media, really trying to say that they're still worried about so-called backdoors, the ability that US seem to be talking about of ultimately tracking where these chips go. China are not like that. That's why they summoned Jensen Huang himself to come and explain about whether or not there'll be any information they don't want to be seen taken. I think longer term, China is looking for self-sufficiency. But in the here and now, of course, US wants to see ultimately it owning the tech stack in China as well as in the United States.
But Caroline, even listening to you describe how China is dealing with this, summoning Jensen Huang to the White House, not to the White House, to China. I think you might know where I'm going with this. And it's to the White House. Instead of China's economy and how they liberalize it moving to the U.S., there's flavors of the opposite happening, of the U.S. looking more like China, summoning the Intel CEO to the White House to explain, having more controls over revenue of companies for the long term. Is that not a more troubling outlook for these big tech players?
I think everyone in the global markets, in technology, are looking in fascination at how these stories dovetail together. On the one side, you have AMD and Nvidia going and discussing with the administration and ultimately playing by these rules and understanding that there is some ultimate pay to play here. When you look at what happened with ultimately Intel, it looks as though the memo hadn't been taken by the CEO. In fact, he was pulling back on manufacturing, on fabrication in the United States. Is this in some way, as Link's equities have been putting it, a way for Intel to recognize and indeed perhaps pushed by the administration, but also by Apollo, for example, like investors who are investing in Intel to make fabrication units over in Ireland? Well, if they're pulling away from that, what does that mean for the companies that put in some of their own money? Do they lose out? So are we going to see people lean on the CEO of Intel to say, look, the American viewpoint here is that, and yes, he's a citizen, it might be reminded, but to keep on fabricating in the US. Don't pull away from that just from a overall profitability perspective and business model perspective. We want you to align yourself with what the grand plan of US politics is here. We'll see as to the reporting from the Wall Street Journal is Lip Bhutan is going to the White House himself to have this discussion, and we'll see whether or not suddenly some of the spigots get fired back on in Ohio and the like.
Well, you make a good point about the daisy chain, the Apollo of it all. Of course, Intel has these deep-pocketed investors who are relying sort of on Intel having a future, but Intel also needs the White House, needs the U.S. government. When you think about the various, investments that they've gotten
Chips
from...
Act.
Exactly.
$8 billion or so. And actually, you heard from Pat Gelsinger. He came on Bloomberg TV network when he was still in control, frustrated that he wasn't able to get the money out of the then Biden administration to be able to be building and hitting the quotas that he needs to meet to be able to get the money in return. Yeah, you are going to hear basically more and more CEOs perhaps read into what's just happened, and investors and analysts are putting this out, that you do need to be close to the administration if you want your businesses to do well. And maybe that's something that Lip Bhutan is learning the hard way at the moment.
Apple, a case study there. Caroline, great context. Really appreciate that. That is Bloomberg Tech co-host Caroline Hyde. You can catch more on BTech at 11 a.m. today. But don't go anywhere, because coming up next, Bitcoin and other cryptocurrencies surging as more institutions buy into the industry. We'll discuss next. This is Open Interest. Welcome back to Open Interest. Let's take stock of this rally. We are 20 minutes into the session, and I call it a rally, and maybe that was generous. You do have green on the screen when it comes to the S&P 500, a little bit more when you take a look at the NASDAQ 100, but small moves overall. We're at record highs right now. We know we have a lot to get through this week between the economic data and the earnings coming up, but you can see that we're trying to hang on to gains here. I will have a lot more to talk about when we take a look at some of the individual movers right now. Nvidia, AMD really in focus right now on reports that maybe the U.S. government will get 15% of their China chip sales. You can see investors trying to make sense of that. These names were down pre-market, now edging a little bit higher. A lot of focus on Intel as well, with the CEO reportedly going to meet with President Trump at the White House today. Intel shareholders seem to like that. Micron boosting its outlook. Again, a lot going on when it comes to the chip space, and you add it all together, it looks pretty good right now. But we also want to talk about crypto here. Bitcoin at fresh all-time highs, similar to what we're seeing in the stock market, Danny. And as you might expect, these crypto equities, Circle, Coinbase, also rallying very hard to start this week.
Yeah, they are, again, as you say, Bitcoin up there at all-time highs. Institutional investors, corporate treasury, they are all adding to their exposure. Year to date, we're up just under 30%. Bloomberg cross-asset reporter Isabel Lee joins us now with the details. What are the details? Do we know the details? I mean, sometimes this thing rallies and we're like, okay, yeah, sure, Bitcoin's up again. What's driving it this time?
Actually, yes, I was like, whoever knows. But I feel like it's a perfect storm. You have digital asset treasury companies, ETF flows, my favorite topic and Katie's favorite topic, and just really a pro-crypto administration. On top of the stablecoin bill, it's like really just a perfect environment for Bitcoin. And you see risk assets also edging higher, and we know that they're correlated. So Ether also, the second largest coin, is also in the green. So really lots of things to excite the crypto market.
I feel like I'm stealing this joke probably from Joe Weisenthal, but whenever crypto's up like 5% or something Bitcoin, it's like, oh, I guess they must have reported really good earnings, right? This must be a fundamental story. Perhaps not, but it is a supply and demand story. You mentioned ETF flows. Let's go right there. There is a lot of demand for this asset class.
A lot of demand. You see ETHA, the largest Ether ETF, and IBIT, the largest Bitcoin ETF, both by BlackRock, really just seeing inflows after inflows. Inflows drive price. So, of course, those feed into each other. And we also have the news that crypto might be in 401ks. So a lot of people are excited. We have really bullish financial advisors saying you can put as much as 15%.
That's a lot.
That depends on your risk tolerance, but more conservatively, some say, like I think BlackRock has said 1 to 2%. So again, that depends on where you are in the whole risk spectrum. But can you imagine Bitcoin being in your 401k? So obviously, whenever Bitcoin is up, my Twitter feed lights up or my X feed lights up. And when Bitcoin is down, it's kind of quiet.
The future is now.
The future is now, and maybe terrifying. I don't know, Isabel, how many details do we actually know about adding crypto to 401ks and what protection there might be and just how big that demand could really be?
For now, we have the directive by Trump, but it still remains to be seen. Like, how are you going to do that? It's a very, very volatile asset class, but we do know that we have the backing of big people like Eric Trump, the son of Donald Trump, who, by the way, over the weekend said, oh, it's a good time because Ether is high up. So you really see a lot of big push there by institutional investors, and you can see how intertwined a lot of these insiders are, including Trump's family, with the crypto industry. So, I mean, you can make your own inference, but then it's really a lot of animal spirits going up. But also, I feel like it raises the question of what is Bitcoin in a portfolio? It's not really a haven play anymore because it behaves more like a risk asset. We have some articles saying Bitcoin is up because risky assets are up.
Yeah, I don't know if anyone is necessarily buying Bitcoin as a hedge versus sort of a place to find some alpha. But you do make an interesting point when you said that, you know, some financial advisors are saying put up to 15% of your portfolio in crypto. You have to wonder where you're taking that 15% from. Is that coming out of your stock exposure, alternatives? Is that coming out of bonds? It's an interesting question.
I feel like for now, it's still kind of seen as a digital gold when it doesn't really behave like gold. We have Bank of America in their fund manager survey saying that just 9% of investors have exposure to crypto. And I looked at the word just, so maybe they expect it to be higher because in an alternate universe, you would think 9%. So it really depends how you look at it, half glass full or empty. But I guess it has more runway to grow if it's just 9%.
Yeah, there's certainly a lot of people who would say as much. Isabel, great reporting. That is Bloomberg's Isabel Lee, with the latest on what's going on with Bitcoin, and there's certainly a lot. Let's check on stocks, though, and what's going on there, though. It's not a lot. The S&P 500 pretty much unchanged at this moment. Same story if you take a look at the NASDAQ 100. The Russell 2000 up a little bit more. It is going to be an interesting week. You think about the fact that we have CPI tomorrow, all eyes on that September Fed meeting and the finite amount of data we get between now and then.
I just wonder how much CPI can derail this rally, because when you had a weak jobs report, we are still in this regime of bad news being good news. We cheered that we're going to get cuts, so if CPI comes in hot, does it derail all of the all-time highs that we are slowly melting up into?
Well, we know we're going to get real-time reaction from the president on social media, so that will
That's for sure.
certainly be interesting as well. Coming up in the next hour, I'm pleased to say we have Banrion's Shana Sissel talking about crypto in your 401k. Excited to continue that conversation. We'll also speak to the CEO of Barrick Mining on that possible gold tariff. A lot of question marks there. And we'll discuss the tariff hit on small businesses with the CEO of Xero. This is Open Interest. We're 30 minutes into the trading day on this Monday morning, searching for direction at all-time highs on the S&P 500. The NASDAQ 100 also trying to decide what to do, Danny.
Why would you step in front of this market melting up to all-time highs with investors the most bullish since February and CPI tomorrow?
Welcome to Bloomberg Open Interest. I'm Katie Greifeld.
And I'm Danny Berger. Coming up on the show, chip maker Nvidia and AMD make an unusual deal with the U.S. government that's raising alarm bells.
And gold futures sliding. Traders waiting for the White House to clarify last week's surprise tariff on bullion bars.
And as we mentioned, a data-filled week kicks off with the inflation report tomorrow. Goldman says U.S. consumers will bear the brunt of Trump's tariffs.
We begin in Washington, where the president is about to lay out his administration's plan to reduce crime in the nation's capital. This comes as the government strikes a deal to get a cut of chip revenue from Nvidia and AMD sales to China. Let's break it all down with Bloomberg senior editor Wendy Benjaminson joining us from D.C. Let's start with Nvidia and with AMD. Of course, this has raised a lot of eyebrows, whatever you want to say, because there's a lot of concerns about precedent here, this sort of pay-to-play dynamic that could be coming into play.
Absolutely. That is the big concern here. It's sort of a natural outgrowth of the way this president has conducted business in the past. You know, be loyal to me and I'll give you a job. Say nice things about me, I'll endorse your race. You know, you want to sell to China? Okay, give us 15% of your profits. It seems to be of your resource. It seems to be, part of this use of economic power to extract concessions or things like that. To that end, the Intel CEO is scheduled to meet at the White House today with Donald Trump, and perhaps it's, what'll it cost me for you to stop calling on me to resign, which is what Trump has been doing with that CEO. So, we'll see what happens later today.
Wendy, it is more pressure on corporate America, but this twist is different. Plenty of people have looked at this and said this looks like something like a tariff on exports. To what degree, Wendy, is this about AMD and Nvidia and advanced AI chips versus just new policy that we could see replicated across the board?
We absolutely, Danny, could see it replicated. And the idea, you're absolutely right, that he is, as I said before, he is using economic power to extract concessions. So Brazil had a higher tariff because they were prosecuting the former president for election fraud. Other countries are being punished for different things. So, but the tax on exports, yes, is an effort, I think, to get some of the revenue back that the U.S. will be spending in terms of his one big beautiful bill, and now he's looking for any opportunity to get revenue. I think it's also just comes naturally to him as he has practiced his own businesses over the years, that the what's in it for me question.
Well, that's the thing, Wendy. It seems like the U.S., as you say, trying to extract revenue here, but that raises questions about, was that the goal all along? You think about the conversation around chip sales into China. It really focused on national security, but it seems like this move would invalidate that argument.
It absolutely does, you're right, and that's one of the big questions. The national security argument has always been there, but it was the same with TikTok, right? Remember the Congress, in a bipartisan vote, voted to ban TikTok for national security reasons. It's still with us. Trump has not done that, and he has sort of thrown the whole national security argument to the wind with that, and now with Nvidia and AMD. So I don't think national security in this case is his top priority.
All right, Wendy, really appreciate your time. That is Bloomberg's Wendy Benjaminson joining us from Washington. We'll monitor President Trump's remarks at the White House and bring you any headlines. You can watch the full event on your terminal at LiveGo. Meanwhile, with the earnings season almost done, investors are shifting gears to the economic picture. Joining us now is Shana Sissel. She is founder and CEO of Banrion Capital Management. Shana, great to have you back with us. And you join us a day ahead of CPI. There is a big focus on the economic picture right now, especially after that weak jobs report that we got just over a week ago. When you think about the Fed's dual mandate, the needle that they're trying to thread between inflation and, of course, the employment picture in America, how does that translate into what you're doing in your portfolio?
I mean, we're an alternative investment specialist shop, so we have a bias to that. So as much as this does impact how we impact equities and fixed income, and obviously it supports sort of our message, which is that you should have an additional diversification benefits from alternatives because of the low correlations and typically less impacted by these types of headlines. All it really changes for us is sort of where we're putting money in the alternative space. You know, there's a number of products out there that are focused on inflation-related things that have things like real assets and stuff of that nature in it. And so those are the types of things that you might see us tilted a little bit more in our portfolios. But overall, I think the bigger picture here is understanding, the Fed mandate, whether or not it's likely that they will cut sometime this year. I've always been of the mindset that I didn't think it was as likely as many people thought. And if it did happen, it would be in the back half of the year. And I've proven to be correct on that. But overall, I think that you really want to pay attention to this inflation number. CPI is not the number that the Fed pays attention to. They're more concerned with PCE, but it will give us an indication of sort of where that might be trending.
Well, as many Fed officials have said, Shana, we are in a period of transition, and often the economic data is complicated and difficult to capture in those periods. We're going to get, to your point, another CPI report. We'll get another labor report as well before the Fed decides. Is that even enough to understand and to have conviction that the Fed will be cutting and that they need to cut?
Well, we got to remember one of the most important parts of this is that because this is all lagging data, so this is stuff that happened in the past. The Fed is making its decisions based on past information, past progress on these things. It's really hard for them to get a handle on what might be happening in the future, which is why the Fed tends to be late when it makes decisions. And so everything we're looking at needs to be looked at through the lens of the fact that, what is this telling about what is happening in the environment today, which is a little bit harder to capture. And I think that's what the Fed is really wrestling with right now. The impact of the uncertainty as it relates to tariffs. There's always new headlines, as you've been pointing out throughout the show, coming out every day. And these things and how they're going to impact future data is really the crux of the problem.
Well, Shana, I also want to get your perspective on what we were just talking about last hour, and that is 401ks and the idea that we could see private equity, private assets, and crypto move into 401ks. You're an alternative shop. That's your specialty. Would love to hear your reaction on whether these assets, these instruments, are suitable for retirement plans.
So it might surprise you to hear me say this, but I am not the biggest fan of this decision. I also think that it's not imminent. There's way more questions than answers as it pertains to this. For example, how exactly does this work? You're talking about private equity, private credit, things of that nature that have subscription documents and qualified and accredited investor hurdles. And how do you follow the know your customer rules? The fees on this are very high. And, we just went through a period over the last decade where the Department of Labor was putting out guidance about fee compression, which has actually hurt the asset management industry, which has pushed them more towards alts as it pertains to the fact that alts just typically are more profitable and have higher fees associated with them. So there's some of, the industry that I'm in, which, I love taking advantage or trying to find ways in which to make more money. I mean, that's the nature of the beast. I don't love this. I think there's some complexity here. Crypto and 401k plans, I kind of get that. But I'd like to just point out, for the most part, you can't get access to ETFs, interval funds, things that to me make more sense. As a potential step towards this for your 401k investors and plan participants. Plan sponsors have significant risk in how they implement this. And I think there will be a lot of thought put into how exactly do we do this and mitigate the risks associated with it as a plan sponsor.
Shana, I got to say, you're not the only one. I was speaking with the head of private equity at one of the major private capital firms who straight up said private equity doesn't make sense. It's too risky. Maybe something like private credit where there's more liquidity is okay. Is there a real risk that some of these assets get shoved into 401ks? Investors are stuck with riskier assets that they realize. And for your industry, for the alt industry, it all suffers the consequences in things like more regulation in the fallout.
Yeah, so I'm going to say the part that a lot of people don't like to say out loud on national television, and this could be to my detriment. But a lot of bad product is likely to come to the market because this is an easy way to gather assets into product that you don't have to worry about going through extensive due diligence on. And I do feel like a lot of bad product gets pushed down to this market under the guise of you're lucky to be at the table kind of thing. And so that's a big concern for me, the quality of the product that would end up here. We have subscription docs. There is extensive due diligence. That's why my company exists. You want to be careful and make sure that this is a suitability issue. I just don't know that it belongs in a 401k plan. I think there were other ways to gain access to alternatives that made more sense, was more liquid, and was a better intermediate step. Things like access to alternative ETFs, interval funds that invest in VC, private credit, private equity.
Shana,
of that nature. I think that was a better play, but we still don't have, even broad alternatives through mutual funds and 401ks. So I'm not sure how quickly this gets adopted.
Yeah, Shana, I wanted to let you finish because it is bold and we love it. And Katie and I will pray for your inbox. That is Banrion founder, president, and CEO Shana Sissel. Thanks to you so much for joining us. All right, let's get a look at some of the single stocks that are moving at this hour with Bloomberg cross-asset reporter Denitsa Tsekova. Denitsa, what you looking at?
Let's start with Nvidia and AMD. Obviously, they were under a lot of pressure earlier today after agreeing to pay 15% of the revenue of certain chip sales to China. Now what we're seeing is some relief for AMD. It switched back to gains, and Nvidia is still under pressures. The chips were earlier banned by the Trump administration and required export licenses to sell. The arrangement reflects the U.S. President Donald Trump's consistent effort to engineer financial bailout for America in return for concessions. Of course, this is a key market for AMD and Nvidia. We're seeing estimates for AMD around 3 to 5 billion. Both companies are up. Nvidia is up more than 34%. AMD is more than 42%. So definitely a strong year. And this could potentially be a boost going forward. Looking at biotech stocks, we're seeing the opposite story. Stocks are down after news that the U.S. Food and Drug Administration vaccine regulator, Vinay Prasad, is set to return to the agency. We're seeing numerous names, Sarepta, Capricor, Replimune. They're both seeing big gains today. Of course, Prasad had ordered Sarepta to hold shipments. He's returning to the agency, but we're not sure what exactly roles he would take. He's definitely taking the leadership of the Center for Biologic Evaluation, but he abruptly left the agency after July 25th. Looking at lithium stocks, they've been under pressure year to date, but they're seeing big relief today. Of the news that operations were halted at a major Chinese mine, this is spurring speculation that Beijing might move to suspend other projects and tackle overcapacity. Some of the names that are up, it's Albemarle, we're seeing SQM, Lithium Americas, really big gains. And just that mine that was shut accounts for 6% of global output. So clearly a big output. The stocks are seeing some relief. A lot of them were flat or down year to date. Back to you, Danny and Katie.
Certainly a lot going on under the hood. Really appreciate that roundup. That is Bloomberg's Denitsa Tsekova. And coming up, a potential IPO for Fannie and Freddie. The mortgage lenders could be valued at $500 billion. More next. This is Open Interest. Now to high interest, a look at what's making headlines around the world. A Colombian senator has died today. The presidential hopeful was shot while speaking to supporters in the capital 2 months ago. Several neurosurgeries since the attack failed to save him.
Now, there are some other top stories that we are looking at this morning. Among them, Micron raising its fourth quarter revenue and earnings outlook, citing improved pricing for one of its key products. The company expects to rake in around $11.2 billion in sales for the 3 months ending August 28th. Elsewhere, Paramount has now secured the exclusive rights to show all events from the Ultimate Fighting Championship in the U.S. over the next 7 years. The $7.7 billion deal is designed to boost the Paramount Paramount Plus streaming service. I'm sure now Katie will be buying it to watching UFC.
Yeah, they're a huge UFC fan over here. Let's turn our attention to Fannie and Freddie. An IPO for the mortgage giants is under consideration as the Trump administration weighs selling the government's shares in the two companies. For more, we're joined by Bloomberg's Bailey Lipschultz, who covers IPOs and everything else. And this is something that has been in the works for a long time. You take a look at the share chart and you can definitely see when the speculation started. Where are we on the timeline?
It still feels early, Katie, and we've seen reporting from Bloomberg and some of our competitors, just Donald Trump bringing in a number of bank CEOs, the heads of the equity capital markets desk that would actually kind of undertake some of these deals. It does seem like the administration is targeting this year. We saw Donald Trump post on social media something alluding to a November date, but there's a lot of kind of wood to chop, if you will, to get these companies actually public. There's a lot of uncertainty around will they be merged, how much money would they be raising, what their valuation would be. So it feels early, but again, when you have people like Bill Ackman talking up this potential merger, you have Donald Trump posting, alluding to an IPO this year, it does feel more real than it did just a few weeks ago.
Well, you brought him up, so let's talk about him a little bit more. Bill Ackman, I mean, I have to imagine he would make a bag on this.
He would, but it really depends on the structure because these do trade over the counter. These are kind of, it's a very complex share structure for both Fannie and Freddie. So it's not kind of a regular way up listing or even a cross listing. There's a lot of uncertainty around what the actual method would be and what the valuation would be. But if you keep an eye on how those shares are trading, Fannie and Freddie right now on the last 12 months returning north of 700%. So big gains so far. The big question is, what are those actually worth if and when an IPO takes place?
In more recent IPOs, Circle's going to have earnings tomorrow. Another chance to get a look inside of them after a big rally, thanks to hopes of various crypto things coming out of the White House. What are you expecting, Bailey?
It'll be interesting. These are companies that we see rally 300-400% in just a few days. First quarter report, what are the actual expectations? People who bought these stocks in the aftermarket, what are they looking for? It's not your traditional IPO where the stock's up 20-30%. The company is kind of sandbagged expectations. They've talked to analysts about what they're going to report. So it's going to be a case where I was joking with an investor on Friday. They could beat the whisper number and fall 20%. They could miss and go up 40%. I don't think anyone really knows. And one of the things that a number of kind of long-term investors I've spoken to about the IPO market is when we're still in this lockup period, you're still in that first 6 months, it's really anyone's guess where some of these stocks can move.
Yeah, I'm taking a look at Circle. According to EE, the implied one-day move post-earnings is 29% in either direction. Yeah. So there you have it. Let's talk a little bit more about the IPO market. We have seen a pickup. You certainly saw that, too, in recent earnings as well. It's interesting because we saw this pickup in the death of summer, really, the doldrums of August and July. How does that set us up for the fall season?
It's going to be interesting. So we do have CoinDesk owner bullish pricing this week. They upsized their potential raise to about $990 million at the top end of the range. We are expecting the likes of a Klarna to kick the tires and potentially go right after Labor Day. So we do have kind of this final rush with Miami Exchange. They're also going to price this week. So 2 deals this week. Then we're going to see a couple weeks where we should see some of these filings flip public. If you want to go post Labor Day, the big question when I talk to bankers and investors is, can the market hold in through the rest of the summer? Can we see a market that's at least hanging out where it is near these all-time highs, and investors really wanting to put money to work post Labor Day because these are riskier assets? But again, what does that lineup look like? It's going to be interesting.
Riskier assets, Klarna kind of has to be a poster child for that, Bailey. You have a company that delayed, to your point, because of tariffs. There's an interview from Klarna CEO saying that they want to be a bank. I mean, buy now, pay later has been one of these things that's constantly under stress with the consumer. How is the market likely to receive an IPO of this magnitude, Bailey?
The big issue, or the big thing that I think Klarna's been dealing with, is how they message to investors what they want to be compared to. Affirm is the easiest comp. Buy now, pay later, copy and paste. That's your comparison. Affirm has been trading quite well right now. It's around $73, peaked at just over 80 back in February after pulling back with that tariff risk. But this is a company that's trying to pitch itself as a bank. Does it want to be compared to a SoFi? They talk about better comparisons. They want to be an N of 1, but when you have a company that is really a layup to compare it to, your multiple on Affirm is really going to be, at least when I talk to buy-side investors, that's what they're going to be comparing the company to.
Yeah. Again, I don't know how I feel about Klarna being a bank. I don't know, like there's so much risk within there, at least it seems that way. Bailey, thank you very much for joining us this morning. We really appreciate your time. That is Bailey Lipschultz. Now, President Trump elsewhere is holding a press conference on crime from the White House. We're going to be monitoring those remarks and bring you any headlines. We're waiting for the president to take the podium, but you can watch the full event and monitor that yourself at Live Go on the terminal. More coming up for you next. This is Bloomberg Open Interest.
Welcome back to Open Interest. Let's get a check on the stock market. We are just about an hour into the trade. About an hour ago, we were talking about that good breath as measured by the S&P 500. It's deteriorated a little bit. You now have more losers than gainers in this index. Tesla, still your biggest contributor to the upside, higher by about 3.7%. Eli Lilly also contributing. Nvidia, this is an interesting name. We know that Nvidia and AMD were under pressure pre-market. That has turned around, at least for Nvidia shares, now higher slightly. Take a look at the downside. Apple, Alphabet, Amazon, the list goes on. Some of your biggest tech names really struggling this morning, and it's that fight that you're seeing at the index level. That is why we're pretty much unchanged when it comes to the S&P 500. Let's walk and talk and take a look at the sector level as well, because that deterioration I was talking about in breadth, you can see it on the sector level. You now have more red than you do green. Healthcare is still your biggest gainer on the S&P 500 when you break it down this way. Consumer discretionary too. But you take a look at what's leading us lower. You had tech, actually your biggest loser about an hour ago, Danny. Now that honor goes to utilities, energy, and materials.
That might be thanks to this headline. AMD now confirming it has received a China AI chip export license. So the market rallying on these hopes versus losing on the idea that they would have to pay more to the U.S. government. Coming up, we're going to continue the earnings conversation. Barrick Mining slumps on disappointing results. Mark Bristow, the company's CEO, will be joining us next on Bloomberg Open Interest.
Barrick Mining is slumping after reporting earnings before the bell this morning. The miner posted a net charge of over $1 billion after one of its gold complexes was seized by Mali's military. Bloomberg Intelligence writing that the write-down overshadowed operational improvements. Joining us now, I'm pleased to say, is Barrick CEO Mark Bristow. Mark, great to have you with us. Certainly a surprise, that $1 billion charge. You can see that reflected in the shares. What can you tell us about the status and the prospects of that specific mine?
It's just an accounting adjustment. It's got nothing really to do about anything. The mine is no longer accounted as a consolidated component of our portfolio, and we had to change the way we account for it, and so it moved from operations to an investment. Doesn't reflect anything on the underlying value or the process that we are busy with to be able to deliver a solution for that operation. On the counter, Katie, the results were in line, and we increased dividends by 50%. We bought back more shares, well on track with our $1 billion share buyback program. Production was up and costs were down. All good for a gold miner, and certainly at these gold prices.
Definitely, with gold prices pushing to record highs. Mark, I think one of the questions, though, is yourself and Barrick have this very strong reputation of being able to run mines in challenging countries, let's say. So how do you ensure investors that you continue to be able to do so as the events unfold in Mali?
I think that's a very good question, and sure, we have a good reputation and have continued to be able to find solutions, work together with our host countries, to ensure that we split the economic benefits fairly between the host country and our business. Mali is quite uniquely different in that it's a junta that overthrew a civilian government and wanted to try and push a new mining code. In fact, a new mining code that didn't even align with the mining code that they had approved. And when you invest in these sort of countries, you expect the sovereign agreements that we undertake and enter into over time to be respected. And we have dispute mechanisms embedded in our agreements, and we invoke those dispute mechanisms as we have done in Mali, just like one would do in any normal country. At the same time, it's important to open the channels of communication, which we have done and we continue to do. And ultimately, I'm pretty sure we'll come to a solution with respect to this challenge.
Mark, I'd also love to talk about selling mines as well. You take a look at the specifics of your earnings. That charge that we're talking about, that $1 billion charge, it was partially offset by a gain of about $745 million on the sale of 50% of your interest in a project in Alaska. We know that you're trying to sell off a mine in Canada, your last Canadian mine. Where are you on that process?
It's a process, as you point out. These things follow a process, and we do not speculate or comment on them until the process is finished. So we are, realizing non-core assets in our industry, which is a consumptive industry, is a natural process. And the flip side of that is we continue to add production and opportunities, which we have done in Barrick over the last 5 years. We are pointing to a 30% increase in gold equivalent production over the next 5 years, which will more than replace the non-core asset sales, and that's a normal process. And we define non-core assets as assets that are no longer within that tier one definition that we focus in on. They still have value, and a smaller operation, which there are many of at the moment, given the commodity prices, will focus in and deliver value, particularly in a rising commodity price. So that's the basis of it, and you would have seen our EBITDA earnings, our earnings per share, some of the highest that Barrick's had in the last decade or so. So, that's our focus, is to keep us really focused on being a leader in sustainable profitability within the mining industry.
Mark, it was probably hard to stay focused over the weekend and on Friday. I'm sure your phone was ringing off the hook of those looking to you to see if you had any understanding of what was going on with gold tariffs. Might not touch you directly, but I wonder, with tariffs being imposed on gold, still waiting to see any sort of clarification, any of the refiners you worked with, have they been holding off on taking unrefined gold while they await for that clarification?
Not, we ship once a week around the world. We have operations in all 4 continents except this Antarctic and Arctic, and so we ship gold every week. That's not impacting us. I think tariffs and again, because we're a global business, the global logistics and procurement is always a challenge. We manage it all the time, and in the greater scheme of things, we manage the swings and roundabouts. But it has made for more dynamic management of our supply chains.
All right, Mark, really appreciate you spending some time with us. That is Mark Bristow of Barrick Mining reporting earnings earlier today. We do have some breaking news when it comes to the EV landscape, specifically Ford planning a $5 billion EV investment with a focus on low-cost models. Interesting news here, trying to achieve mass appeal with maybe some less expensive EVs. You can see the reaction in shares, though, decidedly negative.
Well, it's because this is such a difficult proposition for Ford. For one, just the political environment of EV tax credits expiring sooner than we thought. The other, Katie, the numbers for EVs with Ford over the last 2.5 years, their EV division lost $12 billion, and that includes just $2.2 billion in the first half of this year. Sales have stalled for their EV vehicles. They clearly think a low-cost model will get it done, but history recent history for Ford suggests that there's not a lot of demand there.
Well, that's the thing, right? It's a bigger question is whether or not Americans actually want to buy EVs. You see even Tesla, which is the leader in this category, has been struggling. You can see that in the delivery figures. Ford thinking that maybe it's not desire, demand for EVs overall. Maybe it's just the fact that the price tags are pretty high, but we'll see, of course, if this works out. But you can see that the reaction in shares pretty negative. Just a little bit more detail here. The new Universal EV platform will have EVs starting with a $30,000 mid-size pickup truck in 2027, followed by models priced below $40,000. Still expensive.
Still expensive. Farley telling analysts last month it was the Model T moment and they'd compete with China. And we know Farley himself has also said that China is very far in advance. So it's a leap forward they're going to have to do. Katie, let's look at some of the other single stocks that are moving this hour. We just touched on Ford. With some of your other movers is cross-asset reporter Denitsa Tetskova. Hi, Denitsa.
Hi, Danny. Let's start with Monday.com. A really ugly day. Stock is down 26%. This is the worst day since 2022. This wasn't a bad report per se. The software company actually reported better than expected financial results. But what analysts and clearly investors are worried about is underwhelming third quarter forecast. Second quarter adjusted earnings and revenue came above what the street expected. Of course, amid tariff uncertainty, everybody's worried that companies will spend less on IT. We haven't necessarily seen that trend, but clearly that sentiment is weighing on Monday.com, which is already down 20% year to date. And one company that is actually seeing a really good day is Elf Beauty. It's coming on top of upgrade from Morgan Stanley. The company is currently buy move from equal weight. They see that the consensus view on the street is actually materially too low. They raised the price target by $20. Of course, this comes after Elf Beauty reported better than expected results last week. We've seen some people upgrade their target. Of course, there has been some negative sentiment as well. But one reason Morgan Stanley is bullish is that the targets are currently too low. And of course, the Road acquisition, they see a lot of potential and growth there. That said, the stock is still down year to date. So much needed relief we're seeing today. Another company suffering year to date is Adobe. We saw Melius Research downgrading the software company. The stock was down, but now we're seeing some relief. Of course, this name is at risk at artificial intelligence. And of course, the price target is now down to $310. We saw a basket from Bank of America with the 26 companies that will be most impacted by artificial intelligence, and Adobe is indeed in it. So it's Twist and Shutterstock. The company is down year to date, and we're seeing even more pressure today. Back to you, Katie and Danny.
Yeah, just brutal. Adobe shares down about 23% on a total return basis in 2025. A difficult story there. Bloomberg's Denitsa Tetskova with your roundup. And coming up, Xero CEO Sukhinder Singh Cassidy on the cost of tariffs to small businesses.
And happening right now, President Trump is holding a press conference on crime. Saying that he is placing the D.C. Metro Police under federal control, citing the high crime level. We'll monitor those remarks and bring you any headlines that taking place on your terminal on LiveGo. This is Bloomberg Open Interest.
Because it just goes back 25 years. Can't be worse. Our capital city has been overtaken by violent gangs and bloodthirsty criminals, roving mobs of wild youth, drugged out maniacs and homeless people. And we're not going to let it happen anymore. We're not going to take it. Yeah, just like we did on our southern border. Nobody comes to our southern border anymore. 3 months.
Small U.S. companies are navigating uncertainty due to President Trump's tariffs. The Chamber of Commerce has estimated that the country has about 236,000 small business importers, and they're facing a combined annual tariff hit of $202 billion. Joining us now is Xero CEO Sukhinder Singh Cassidy, who works with small businesses on various solutions. Sukhinder, wonderful to speak with you this morning. It's a time where the big businesses have been stockpiling, have been really getting ready for this moment. How much are small businesses losing out to the large ones who have the ability to use economies of scales in their favor as they navigate tariffs?
Well, I think you're hitting the key question here. On the one hand, every indication that we see in the market is that small businesses continue to face uncertainty, and they cite inflation. I think both the pressure of goods on their own supply chain and their need to raise prices as key issues, while interestingly, their future optimism, according to indexes like NFIB and our own at Xero, indicate they feel reasonably positive. So what I take away from the small business data is, yes, they are uncertain about the future. They are managing prices and need to. And yet, at the same time, they are feeling slightly more optimistic than they were earlier this spring.
Well, that's certainly good news. Let's talk a little bit about some of those cross currents. We've discussed tariffs. There still feels like a very uncertain environment there. What about when it comes to interest rates? You think about the Federal Reserve has definitely been less about cutting rates than maybe some were coming into this year. Are we at a place, though, when it comes to the small business landscape where business owners are used to it? Is this the new normal? Have people learned how to navigate under relatively high interest rates?
Well, they have. Now, we'll see, as you know, what the Fed does this fall. But it is true that what they are doing is, I'd say, be very limited in their future spending. So if you look at indexes, from the NFIB to the U.S. Small Business Chamber of Commerce index, what you will see is that they are not, I would say, all feet forward on spending, on capital expenditure. And so I think in an environment where rates continue to be, let's say, uncertain, small businesses may be optimistic, but they are guarding their capital expenditure in periods like this. And so I think this is how we think about it. Now, you're noting here, obviously, the latest report is just a day or so away. That's the June numbers that you're showcasing. And they show that uncertainty is, let's say, lower than it was in the previous reports. And yet it looks like that index is still near an all-time high. So I feel like this small business is operating in relatively mixed conditions while being a little bit more optimistic about the future. And honestly, still has the foot, I would say, on the brakes when it comes to capital expenditure.
How much does that extend to labor? Because Sukhinder, it's 46% of American workers that are employed at small businesses. What do hiring plans look like? What do firing plans look like? Is this still a small business community that is willing to keep and extend and hire more?
Well, what you see, I think, from jobs reports with regard to small businesses is that we are relatively flat when it comes to jobs growth. And we are seeing, I would say, similar levels of concerns about employment, unemployment. So it's still a tight labor market, but you don't see expansive job growth yet. So again, let's come back to what is a small business doing right now in this environment? While they might be slightly more bullish than they were 3 months ago about the overall environment, they're still being pretty careful with regards to, jobs expansion, capital expansion, and really monitoring this environment, which I would say, as they should. They are the heartbeat of our economy, but they're also the number one constituent that needs to manage cash, as we talked about.
Sukhinder, also really curious to get your thoughts on M&A. Of course, Xero completed its own round of M&A recently with your acquisition of Melio, which is a payment solution company, as I understand it. I'd love to hear why this acquisition makes sense for you right now. And even outside of Xero, is this a sign of things to come in the small business consolidation space?
Yes, I think you're hitting on the two key points, and let me bring it full circle. Number one, we acquired Melio for about $2.5 billion, or announced our acquisition. The deal has yet to close in June. Melio is a leading bill pay provider on both its own site and embedded on other sites like Fiserv for small businesses. So why did we, as an accounting software provider, acquire them? Very simple, to close that loop. Invoices get created on our platform. Bills get monitored on our platform. We feel like our number one job is to help small businesses manage cash flow, not just their accounting operations. So we're closing that loop in the US to make it easier to do all of these jobs. And more importantly, again, get insight and management of your cash directly on one platform. Do I think this is indicative of a larger landscape? What I would say is one of the reasons we bought Melio is we see fintech convergence. So as I noted earlier, Melio is also a provider to companies like Shopify and Fiserv. So we do think more and more places that small businesses do their business, they may want to manage operations financially. And so we love that we can consolidate this operation on Xero. We also love that Melio provides the same functionality to other small business platforms in that convergence kind of thesis.
All right, Sukhinder, got to leave it there. Really great to get some time with you. That is Xero CEO Sukhinder Singh Cassidy. Thank you. Now, coming up next, investors are eyeing tomorrow's inflation data with prices in core goods and services expected to pick up. We'll take a look next. This is Open Interest. Traders are looking ahead to tomorrow's inflation report with CPI expected to pick up as retailers gradually raise prices to combat higher import duties. Joining us now is Bloomberg's international economics and policy correspondent Mike McKee to preview it with us. And numbers aside, this comes at a very interesting moment for the Federal Reserve.
Yeah, because everybody's focused on whether the Fed will cut rates in September because we got smacked in the face by that jobs report on August 1st. Now, the question is, do we get smacked in the face by the CPI numbers, or do we just get a little more information? Because the tariffs have only really started. Some things, some areas, tariffs have been on for a while, like steel and autos, and we've seen those prices go up, washing machine prices, things like that made with steel. Now, the CPI is expected to jump a little bit. Keep an eye on that core CPI year over year. If it goes significantly over 3, that'll start worrying the Fed. But mostly we're going to parse the numbers under the hood and see if we get some tariff effects. We probably will see goods prices go up, and we'll see if the ones that we have seen tariffs on go up. And then the question is, do we see companies taking advantage of prices going up to raise prices on things that may not be tariffed, or to see service prices go up?
There's also going to be the sideshow distraction, because this will be the first CPI report without the BLS chief at the head, with no one there. We're still waiting for that appointment, and you're likely to see probably some reaction from the White House, too. Mike, as people parse through the data, how important will it be to see the quality of the data and what sort of reaction that might get from this White House?
I think the quality of the data will be as good as it has been. It's not going to go down because the commissioner is gone. The commissioner doesn't actually put the report together. They just see the report when it's done and look at the press release and make sure that it's all above board, and then they send it on to the White House. So I don't think you're going to see any change here. Obviously, the tinfoil hat crowd out there will probably find something they dislike about it and blame it on either the fact that there is a commissioner or there's not a commissioner. But at this point, the statistical agencies do have big problems, but this is not, it's not going to change what we're getting out of the data at the moment.
Mm-hmm. There will be fingers and they will be pointed. We know that is for certain. I want to go back to that phrase you used, smacked in the face. That's certainly what that jobs report felt like a couple of weeks ago. What would smacked in the face look like in this context of the numbers that we're going to get at 8:30 a.m. tomorrow?
Well, we're looking at basically 0.2 to 0.3 rise in the monthly numbers. If we got a 0.4 rise, that would be in that area. And then you would see the year-over-year numbers go up. Now, the Fed is thinking that we would get to 3% on the PCE. CPI runs a little stronger than that, so we might get to 3.1 or 3.2 as an equivalent. And if you got there that fast, they would start to worry. And if it went above that, 3.5 or something like that, they would begin to get concerned that inflation is so strong we cannot cut rates. So that's something to keep an eye on. If we just get the numbers that we're looking at now, they still would like to keep rates unchanged, but if the labor market is weakening, they will do a rate cut.
Absolutely. Mike McKee, it's going to be a lot of fun tomorrow. We'll look forward to your coverage. That is Bloomberg's Michael McKee on the CPI figures due tomorrow at 8:30 a.m. Let's take a quick check on these markets. Not too much to talk about. The S&P 500 pretty much unchanged. The color's red. That's a little bit interesting. The NASDAQ 100, the color is green, but really contained moves overall as we wait. Maybe some sort of catalyst in the form of earnings, in the form of economic data. And the Russell 2000 is not on the screen, but the bond market is. The 10-year Treasury yield down about 2 basis points if you round up or down, depending on your perspective. In any case, coming up tomorrow, Nuveen CIO Sarah Malik joins us. Former Bridgewater strategist Rebecca Patterson does as well. And Marsh McLennan CEO John Doyle. This is Open Interest.